What's up, everyone? So thank all of you guys for tuning in on today's video. I kind of just wanted to make a video for a lot of you guys who are interested in Forex in general, um, and are kind of being misled potentially, or just don't know where to start, right? As far as getting into the market, how to trade and things like that. So I'll be trying to give you guys a couple of little tips here and there, as much as information that I can. To kind of help guide you guys as far as in the right direction. So most of the time, as far as for most traders, the platform that we use to analyze these charts are going to be tradingview.com. This is where I analyze pretty much all of my charts, unless I'm using a MT4 platform, which it would be through my broker, right? So it's up to you guys as far as a broker. You will need a broker as far as to trade in the market, right? You're going to have to register with the broker. There are going to be documents that you will need to submit. Most of the time, it's just going to be proof of address and a copy of your driver's license, things like that. Once you submit that to that broker, within usually about a week, they usually get you approved. And from there, you make your deposit to your account. And then from there, you can start trading. If you are a new trader, I don't suggest that you start off with real money. They definitely have demo options to where you can trial and test things out with kind of play money. That way you can kind of get a feel for the market, okay? But I'm not going to get too beginner in this video. I kind of wanted to help more so on the analysis side, right? So beginning analysis, kind of the things that you kind of need to keep an eye on in the market, and different things like that. So there are definitely different strategies that you can use to approach the market as far as when it comes to analyzing. Me personally, I am a price action technical analysis trader, more so of a swing trader these days. But that's just me in a nutshell, guys. So from here, we're just going to go ahead and kind of dive in to one of these charts, and then I'll kind of break things down as much as I can to you guys as far as from a beginner state. As far as me, I am with the FXK team. If you guys would like more education and other things like that, feel free to visit fxktrading.com, or you guys can shoot me an email at deandreforex@gmail.com. That's DEANDRE forex@gmail.com, guys. So on TradingView, usually this is where you would go to go ahead and pick your chart, right? If you already have things set up, then you can have a chart list over here, different things like that. But for this specific purpose of this today's educational video, I'm going to look up USDJPY. Okay, so once you type USDJPY in there, make sure it's set on ticker. You're going to go to full featured chart, and you're going to click that button. And then it's going to bring you up a chart. Okay, so as you guys can see, I already pretty much have USD JPY marked up, but we're going to go ahead and start over for you guys so we can show you guys a couple of things, a couple of tricks you can use in the market, right? So one of the first things that I personally do, and again, this video, guys, is based off of my strategy, how I approach the market. And it's just purely off of that. Again, there's way many strategies, you know, different people use different strategies, different things like that. This is just the method that I use to approach the market. So usually I don't check out the monthly starting off. I usually start off with the weekly, okay? And if I can see my vision from the weekly, then I just go from the weekly and I break it down to the daily and then the 4 hour and 1 hour. Me personally, I've been trading 6 years. I don't really go under the 1 hour that much anymore. I usually stick to those higher time frames because they provide more accuracy, okay? So here on USDJPY, just starting off, we can see we have price action here, okay? I do have some moving averages on the chart as well. I'm going to go ahead and take those off. That's what those squiggly lines were. They're called moving averages. They're basically support and resistance that moves, okay? It moves automatically based on a certain day period, okay, that you have set, okay? So generally, when you come into the market, you want to start off with just your basic price action, and you want to kind of take a step back to see what exactly the market is telling you, right? You don't want to be too zoomed in. You want to kind of take a step out to see any potential support and resistances or any potential trend lines. These are barriers that usually the market would either bounce off of as far as a rejection or breakthrough, but you can use these to help guide you as far as in the correct direction of where the market could potentially be going, right? So as a support, support is also known as a floor, right? So think of it as this way: the support is the floor, resistance is the ceiling, right? So the bottom is the floor, resistance is the top, which is the ceiling. So if the market is bouncing up and down, right, then this is the floor, which is support, resistance, which is the ceiling, bounce back down to support, back up to resistance, back down to support. Okay, so that's how it works. It bounces up and down, right? But we may get a break of support. Okay, so if we do get a break of support, then this support now turns into a resistance. Wherever price action is, okay, that's how you kind of take your judgment. So if price is down here, then that means that this line is on top, right? Which makes it a resistance. Okay, and then we would have came down and bounced to a new support level, right? So now we're at a new support level and this is resistance now. But if we bounce off of this support, come back to this resistance and break back through, now this resistance turns back to support because price action is above it. And now we're playing with this range back into that resistance here, support, resistance, support, okay? So that's a little bit of support and resistance there, guys. Trend lines are another thing that you're going to be using a lot in the market. So this is kind of a angled line that you use, pretty much a support and resistance from an angle, right? So you would align this with 2 points. You start from the wicks, you get 2 areas, and then you extend it out, okay? There's a lot of people who like to cut corners, do things like this so you can get all of them to touch. Don't do that, guys. It's best to just go ahead and do it correctly by the wicks. You get 2 touches, and then you extend it out from there, okay? So that's pretty much a trend line. Um, Not going to dive too far into those, guys. You guys can look up certain videos as far as on YouTube as well to help you out with the trend lines. Okay. So price action itself, there's another thing you're going to have to keep eye on the entire time, guys. Every candlestick tells you a story. Okay. You have to be able to identify what the candlestick is trying to tell you. Okay. Once you're able to identify what the candlestick is potentially telling you, then you're able to come up with a kind of a better analysis on what's going to happen, right? So just from looking at these candlesticks here, we can see that we had a sharp bearish rejection off of this resistance level, okay, around 108,700. Okay, you can see that barrier there that's kind of forming there, right? You can see how there's kind of a barrier throughout this area, right? You can see price came down to tap this support level, rejection came back down to tap this support level, rejection came back, rejection at support, came back through, and then we broke support. So that makes that resistance, remember? And then we drop down and we come to a new support. So you can see here now it's actually still playing off of this new support, right? And then we come back up to resistance and then we break it. Now it's support again. Price action is consolidating from a bigger perspective, right? So resistance throughout this area, okay? And then back down to support, respect a little bit. And this right here was a breakthrough. This could have been manipulation, different things in the market. Could have been something fundamental as well that gave that impulsive move to the downside just to get that rejection in respect of support ultimately at that 109 level. And then you guys can see we got the retracement back up, okay? And then back down to support to break it. And then we came back up a little bit as resistance here, right? And then this candlestick here is called a bearish engulfing candlestick, okay? Anytime you see a candlestick like this, it usually means that the following candlestick is going to give that same type of momentum, right? So this candlestick is kind of the start of the bearish engulfing. So if this is a bearish engulfing, it should accumulate another following candlestick that actually produces the move from this candlestick, if that makes sense, right? So in this case, this would be considered a bullish engulfing, right? And so the following candlestick gave us the bullish move. So right now, just from looking at these candlesticks here, I can still see that there's still a little bit of momentum in this candlestick, okay? So we're not fully slowing up just yet. There's so far, this candlestick is still kind of strongly bullish. We are on the weekly time frame. This candlestick has already closed. So I wouldn't want to look for shorts just yet, okay? What I would like to do is watch for price action to kind of build itself, okay? I want to see some exhaustion throughout this area of interest. So again, we did just have a USD JPY chart up. I deleted that for you guys because I wanted you guys to see me mark it back up from scratch so you can kind of get a view of an insight of kind of how I mark up my charts personally. And again, guys, I really just wanted to make this video for you guys to truly help you guys. I'm not really holding any information back. Kind of skipping a lot of the basic information, but some of the gems, guys, I'm going to make sure I drop them as many as I can for you guys to help you guys along your journey as far as becoming a trader. Because I know, guys, there's so many YouTube videos out there of just a lot of bullshit, guys. You have all of your MLM groups that are just, sign one person up, get the other person to sign up, just a lot of bullshit. And I know a lot of you guys actually are interested in learning how to trade personally. So that's the purpose of this video, guys, is to help you get a little bit more of an insight on how to actually trade in the market, okay? So we have a counter trend line here at the top. Long term, as far as from a bigger perspective, we're actually playing in a descending channel, okay? And so you'll have channels in the market. You'll have different structures that you can trade off of, different patterns that also help you kind of give you a better insight on what the market is going to do. For example, you have double bottoms, double tops, head and shoulders patterns, inverted head and shoulders patterns. You have wedges. You have pendants. You have a lot of different things, guys. You have your candlesticks itself, your dojis, your inverted hammers, your normal hammers, your engulfings. So there's a lot of different things that come into factor. Okay, so if you do want to take this journey as far as becoming a trader, guys, you do need to understand that this is something that you have to be dedicated to. And you have to just be ready to be in the journey all in. Okay, you're probably going to give up somewhere throughout the journey. It happens. It's normal. I've given up throughout my journey as well. I think we all have, as far as the best of us. Okay, so it's about staying with it and coming back even stronger each time. So I haven't quit personally. I've been trading 6 years now. I haven't took a break as far as like, me taking a quick little quit there for probably about 4 years now. So my quitting was pretty much in my first 2 years of trading. I've already, gotten over my curve. A lot of you probably won't understand what that means, but for those who have been trading a long time, and have reached that level that they've been looking for, then you would understand what I'm saying. I've already reached my curve, thank God. So from here, it's only up, guys. We only get better, and we only learn more, right? So another thing that you really want to be able to identify is the trend, okay? So this video, again, guys, is not in any specific order. This is just something I was just chilling, and I wanted to just drop a video for you guys. That's exactly how this video came about. I was just analyzing, and I thought, hey, why not drop a video for those out there who are a little bit interested in learning how to trade and are maybe being misguided right now. So I dropped the video, right? So excuse me if everything seems a little scrambled, guys. Just try to take what you can, where you can. Take the little things that I say and maybe go look a little further into them, right? So I'm going to name a lot of different things. From there, you can go and look and research those things to break them down, right? Now, when you are researching certain things, make sure you're researching them in the most simplest form, okay? I've already been through the million indicators. I've already been through the cloudy charts. These days, guys, I'm going to tell you that just to be truthful, the clean chart is the best way to go. Okay, less indicators, the clean chart. You need to be able to see the market purely for what it's telling you. Okay, some people are a lot better with all these indicators, millions of indicators. That's great. But I personally think that when it comes to long term, the clean chart is just best, guys. Now, I'm not saying that I don't use indicators. I do. There's just very few, okay? On my general analysis, the only things that I'm using is usually moving averages and Fibonacci, support and resistances, supply and demand zones, and trend lines. So again, you can further research each of those things that I just said, to get yourself as far as being a better trader. Go research supply and demand zones. Learn what supply and demand zones are. Research trend lines, learn what they are. Research some of the candlesticks that I just told you. Research some of the patterns that I just told you. Take these different hints that I'm giving you guys and take them and research further, okay? And that alone will help you become a better trader. I do offer mentoring as well, so if you'd like education as far as for me personally, feel free to just hit me up, guys. I've already gave you my information as far as where to find me, okay? You can also follow me on Telegram at FXK Trading Co. Okay, that's FXK Trading Co. Okay, so another thing good to be able to identify pretty much every time you analyze, you have to be able to identify the trend. Okay, if you're a scalper, which is a trader who trades typically on the lower time frame and for a shorter time period perspective, right? If you're a scalper, then you can maybe get away with it a little bit more. As far as trading within the same higher time frame candle. That way, you're not necessarily looking for the long-term trend. You're just looking for those short-term in and outs. But if you're a trader like myself, which is a more so kind of a 4 hour to daily, more so on that swing trader side, maybe to weekly, then you like to identify the complete trend. That way, you know where price action is potentially going. Okay. So one of the things that you can use to identify trend is going to be price action itself. And then the second thing you can use is going to be your higher highs, higher lows, lower highs, lower lows. These tend to identify and show you which way the market is actually headed. So just kind of give you an example. Again, guys, I'm going to try to touch basic on a lot of different things. So just take what I give you and then go further research, right? So lower highs, lower lows, higher lows. Go look further into that, okay, to make you a better trader, okay? Research further into what are lower highs and lower lows, okay? So looking at these lower highs and lower lows, this actually shows you what the trend is doing, right? So we have a low. Well, let's start from the top, okay? So we have our trend here, right? And then we go for a brief consolidated period, right? We're bouncing around in these two ranges that we have, that resistance and that support, right? So within this range, we also have our box consolidation ranges, right? So we've come to a top, right? So let's say from this smaller trend, we were having a inner uptrend, right? So uptrend, the market is headed up, right? Downtrend, the market is headed down, right? So within this uptrend, we come to a resistance range, right? A box range. We start to consolidate a little bit, right? And so from there, we form a top. From that top, we can start to see the trend starting to change, right? So we go from making higher highs and higher lows throughout this range right here, right? So we start here, higher high, higher low, right? Higher high, higher low, higher high, and then we get that kind of that trend changing movement in here, right? And so then we switch over to those lower highs and lower lows. So this is actually the top right here, right? So this is truly where the trend said, you know, hey, we want to turn around and change. So this is that changing moment. From here, we start to make lower highs and lower lows. So if you're a scalper, then you're looking at it from a more so of a smaller perspective, and you're probably looking at these lower highs and lower lows like this throughout this range. But us from a swinger's perspective, we want to see the kind of the bigger picture, right? So we're looking at this lower high here, and then we make this lower low here, and then we make a lower high here. And then we form another lower low. So these are actually kind of showing us what the trend is doing, as far as in the market. So right now we can see that we're currently in a downtrend. We have reached support ultimately, as well as the bottom of the trend line. So one thing about trend lines that you should know is that they're good for 3 to 4 retests, okay? Usually before you might consider them might going to be breaking, okay? So usually once a trend line's been tested 3 times, I consider it weak, okay? Again, trend lines and support and resistances, they're all just barriers, you know? So if one is getting weak, that means that barrier is getting weak. If a barrier is getting weak, then it could potentially be broken through, right? So what I'm actually looking for is for another retest on the top side of this trend line, okay? And then a potential move to the downside. And so I'll be kind of showing you guys why I'm actually expecting that, okay? So we're gonna go ahead and scratch the chart. Give me 1 second, guys. I'm gonna grab a water bottle, and then I'm gonna go ahead and just analyze this pair throughout so you guys can see how I work my stuff, okay? All right, thank you guys for holding. So let's go ahead and dive on back in. Sorry about that, guys. Okay. So just starting all the way over, just kind of giving you a couple little nuggets here and there. Back to that weekly time frame. So again, right now, price action is showing a little bit more so on the bullish momentum side. So what I personally want to see is price action weaken, okay? So I'm going to put that trend line back up there. because that's where I want to see it weaken. Now, Fibonacci. Fibonacci, in order to kind of get good with Fibonacci, guys, you have to be able to identify highs and lows, okay? Fibonacci points are placed at highs and lows. So once you master those, then you'll be a lot more fluent with Fibonacci. Fibonacci is probably the greatest trading tool I've ever come across. I'm so thankful for Fibonacci, guys. So definitely master it. Learn as much as you can about Fibonacci. I can tell you right now, the best levels to trade on are going to be within this range, from the 50 to the 71, okay? These are going to be usually your best levels to trade this Fibonacci on, okay? The absolute best level is going to be your 61.8 every time, okay? It's the golden ratio and it's the perfect reversal level. So if you do get that exhaustion, things like that in the market around that 61.8, then that's what you want to look for as far as the reversal, okay? So me personally, when I am looking for a reversal, I'm looking for price action, I'm looking for exhaustion, I'm looking for price patterns, I'm looking for the candlesticks, I'm looking for anything that I can find to help me kind of add more confluences onto the chart as far as for my assumption of where I think the market will go, right? I also use harmonics as well. And honestly, usually when you're looking for harmonic, guys, you're looking for double tops, double bottoms. That's usually the first thing you look for to be able to kind of identify harmonics. So we can see potentially we might actually have a harmonic throughout here, but I'm not going to go ahead and dive into that right now. But I do use harmonics as well. So if I am getting a harmonic, that's something that's going to add that extra confluence. The main thing that I always look for before I take my trade is exhaustion. Exhaustion is so key, guys. You really need to trade with momentum, okay? Trade with the market, trade with the momentum, okay? And when you're trying to catch the momentum moves, then you're going to be able to identify exhaustion. Every time there's going to be a reversal, there's going to be something in the market that lets you know that the market is tired, it's exhausted, and it's ready to turn around, right? So it's up to you as a trader to be able to identify what it is that the market's showing you to tell you that it's getting tired, right? So on that weekly perspective, and a lot of times I like to double my view. This is another good thing to do, okay? So kind of saving you guys some time in your journey, double your view. That way you get both of those perspectives at the same time. You don't have to keep the double view up all the time, but when you're analyzing, it's really good to double that view. That way you make sure you're not kind of crossing your vision and you're keeping the same thorough vision from that higher time frame to that lower time frame, right? So the weekly perspective to the to the daily perspective here. So strong candle, what I want to see first is starting to weaken. Okay, I want to see and the next following candle weaken. Today is Sunday. This candle is already closed. The market is still closed as of now. So once the market opens, it's going to form a new candlestick. That candlestick for me needs to be the candlestick that either shows the exhaustion or it needs to show the reversal. Okay, so when I say show the exhaustion, I'm saying some kind of reversal candlestick in here with a wick at that 61.8 to maybe close as a doji, maybe close as a inverted hammer, or some kind of reversal candlestick, right? To let you also know from price action perspective that the market is potentially exhausted and tired. Now we already have our analysis and our assumptions. So that candlestick now showing us that it is exhausted and things like that, that's going to be that extra confirmation, right? And we want as many confirmations as we can get. So once I see that on the weekly perspective, now that's just the weekly perspective for a weekly candlestick, there's two options. We can get that first option of the exhaustion candlestick, or we can get a nice wick in here, depending on how strong the trend is. We might get a strong rejection out of this area as far as this week. So it would be something like this. So you see how we got that bullish candle here up to the TL area, and then we got a strong bearish rejection, right? So either we're going to see a exhaustion in here, okay, of some kind of reversal candlestick, or we're going to get a strong candlestick like that this upcoming week to reject us out of that range. Okay, now this is only if my analysis is correct. If my analysis is incorrect, then we would break above this trend line and continue further up as far as in price. Okay, but as far as for this analysis, I am seeing the bears on USD JPY. Today is September the 8th of 2019. Okay, guys. So I'm going to go ahead and take the double view off real quick. Just another little nugget I wanted to throw in there for you guys. And so from that weekly perspective, okay, so I just kind of gave you what I wanted to see on the weekly. Now what I want to see on the daily, I'm going to go ahead and tell you guys, right? So far we can see we had a strong daily candle here, right, to break out of kind of this little range within here, right? We can also see we're potentially forming a double bottom, okay? In the market makes double bottoms, double tops. Usually with a double bottom or a double top, you take the measurement, okay? Now it's not all the time, but usually most of the time you take the measurement of it, and from the neckline break, you clone it, and it can usually give you the estimate of where price will hit. Now, again, you need to understand that what the actual trend is telling you and what's specifically possible, right? So if your analysis is bearish, then you won't really look for something like this to happen, okay? I'm just kind of giving you guys an insight on double bottoms and double tops, okay? So my analysis is bearish. I'm actually not even looking to see price action head all the way up here. We can actually form something else throughout here. We can get some kind of corrective structure, which could end up something like this. So something like a bearish flag almost, while we correct in here and then get that impulsive move to the downside. So looking at the candlestick right now, since we had that weekly strong candlestick, I do see the daily starting to slow up. This red candlestick right here is called a spinning top. Okay, so this is a candlestick that represents indecision in the market. If you see something like this also represents exhaustion. Indecision means the market is indecisive, not sure where exactly it wants to go. That's what you want to see when you get to certain levels and certain barriers of reversal that you're looking for. So like right around this area, you can see we had three candlesticks of indecision before we actually got a bullish engulfing to take off out of this range to see further bulls in the market, right? So in this area, that's really what I'm looking for, is a couple of more accumulation of candlesticks to form throughout this area to build up that exhaustion as far as in price action. That way we can expect more bearish momentum potentially to come into the market. Now, me personally, I'm not looking for price action to come and retest fully to the trend line. Price does not always have to come and retest the trend line, okay? It can come close to it, but it doesn't mean it always has to come straight directly to it. So what I would actually be looking for is for my daily price action candlesticks on how they're closing, okay? That's going to show you potential momentum of where the market is. So if we continue to get these indecisive candlesticks as we approach that 61.8 with not a lot of body to them and more so of wicks, okay, so the wick is this little tail area, this little thin tail area, right? Not the body of the candlestick, but the wick. If you're not familiar with what wicks are as far as versus the candlestick body, again, guys, YouTube these things or research them as far as what wicks are and what candlestick bodies are, okay? So I want to see price give us some nice indecisive candlesticks in this range before we look to potentially take this trade to the downside, okay? So seeing that we are in a bearish trend, okay, and we had that descending channel, I'm going to go ahead and put that back on here. So potentially we'll be looking for maybe new lows, okay? So we're still forming that lower highs and lower lows throughout this descending channel here. So long-term price action is kind of telling us that we might want to see a new low, okay? Alrighty. So just drawing some of these highlighted circles back on here so I can show you guys the trend a little bit better. So back to this low here. So how do we know if the market is going to make a new low? Okay. So what I would do, and again, guys, Please don't forget that this complete video is based off of my personal strategy and how I view the market, okay? So how do we know if price action is going to make a new low or not? Well, we like to look to see what is below the 104, we can really say 105 level, right? So do we have any support and resistances below this level? Mainly just support, I'm sorry, below this level. So right now, we can see that pretty much we've already retested support here, okay? So we retested it 3 times, but below this support, there's actually no more support until we get to this bottom area here. And this would be a nice demand area to look into. If we look a little bit further back in price action, we can, of course, definitely find some support and resistance levels. Me personally, I don't look too far back into price. I like to get maybe 1 to 2 years worth of data at the most. Okay, guys, we don't need to go all the way back 10 years. I just don't see the point of it. There's some people who look back that far, but me personally, I like to trade on kind of the now versus too far back when. So not saying that you shouldn't look at previous data, guys. You just don't need to look too far back is all I'm saying, right? So from here, just from here to here, this is almost since 2016, guys. So this is almost 3 years of data, right? So we don't need to go all the way back to 2012 and 2007 to find these key levels, right? We can just get that good amount of data here, about 2 to 3 years of data, and we can kind of go with that, guys, okay? So just looking at this here, there's not really a lot of support until we get down here, okay, to around this 101 level or that 100 flat level, okay? So from here, what I would actually look for is the reaction off of this support. We can definitely tell that the support has been key as far as for us as a barrier in the market. We've already retested it 3 times and completely rejected from it, right? So we can definitely tell it's a strong area. Me personally, I don't like to always go for the new low. I usually like to go for the retest. The reason why is because the market is heavily influenced these days, to me personally, by a lot of manipulation and more so of emotions, okay? And just to kind of explain a little bit what I mean by that, I've been trading 6 years, so I've seen a decent amount of things, okay? And nowadays, I'm starting to see the market react more off of general emotions than more data itself, right? So nowadays, you have China purposely manipulating their currency. These days, now Twitter is a major influencer on the market, and it shouldn't be. I don't feel like a texting or dating app should have that much influence on the financial markets. But let alone, we all know how Trump works. It can be 3 in the morning if he didn't get his pancakes that day, and if he tweets something out, it could have a catastrophic move on the market, and people stop losses can start getting hit, different things like that. So to me, these days, guys, the market is a lot more influenced by emotion. And that's one thing I've learned over my last 3 years is that you trade with no emotion. Okay. You don't have emotions in the market, guys. You don't be attached. Don't never be attached to a trade. You come in with the same mindset I'm sorry, guys, the same mindset that you leave out with, right? So just stay focused. Don't let emotions kind of tailor anything as far as your decisions in the market, and just kind of keep pushing, right? So that's just my perspective on where I think the market is these days. So instead of going for a new low, which would usually probably be established at the 1272 area, which is an extension off of the Fibonacci. If we do get this retracement off of this level here at the 61.8, we might also form what's called a ABCD pattern. Okay, so A, B, C, and the D comes at the 1272 area, right? So we can also get a pattern like this. But me personally, again, I like to go for the retest. Okay, so that would be in this area. Another thing I like to do is highlight key areas as far as of price action. And what I actually do is look further in the future for when it's time at these key levels. So this is how I mark them. So I would do something like this. And I don't do a lot of these, guys, just a few. I'm going to hop a little bit on the lower time frame. That way I can get a little bit better view of price action at this last bottom area. And we're actually going to go from here. So again, that was on the daily perspective. Once you go to a lower time frame, you see things a lot different, right? So as you can see here, guys, like I said, starting off, I don't really use a lot of indicators. As we're breaking this down, I'm using pure price action, zones, a couple of lines, support and resistance here, trend lines, Fibonacci, and a couple of bubbles, right? That's all we have on here so far, guys. You don't need all of these super millions of indicators to trade the market, guys, and identify what the market is trying to potentially tell you, okay? So just to kind of go a little bit deeper, we're going to go ahead and start putting some things on the chart like our moving averages, right? So two of the main moving averages that I use are going to be the 50 and the 200, guys. I'm dropping nuggets here, guys. I'm not holding anything back. The 50, okay, is my short-term price action moving average. The 200 is my long-term price action moving average. These are both exponential moving averages, okay? Exponential moving average over a simple moving average. Exponential shows you a quicker price action view versus a simple moving average shows you a more so of a long-term price action view, right? That's the best way I can kind of break those down. So what I look for on these moving averages is either pullbacks with exhaustion, okay, in my areas of interest. So I do love how I have this 200 aligning perfectly with the 61.8 as confluence in the area of interest that I'm looking to actually take the market back to the downside, okay? So that's good to see there. Another thing that I look for these two is when the 50 crosses below the 200, which is the yellow. The 50 is the light blue. When the 50 crosses below, it's known as a death cross. This signals bearish momentum potentially coming into the market, okay? When the 50 crosses above, okay, so you guys can see down here when the 50 crossed above, it signals a golden cross. So again, YouTube, what is a death cross? What is a golden cross? Take these nuggets, break them down, and research, guys. Golden cross signals a potential bullish movement in the market, okay? So back over here. One sec, guys. I had to get something to drink. Right? So seeing that 200 is aligning in this area, that is a good confluence as well. So at this point, guys, from here, we actually look to find targets since we now have our vision from the highest perspective down, right? So as you guys can see, I haven't went under the 4 hour, okay? We're staying on the higher time frames right now. We're on the 8 hour, okay? So we're not going all the way down to these lower time frames because they usually add a lot of more indecision and less accuracy, right? And then the higher time frame candles typically give you a stronger representation of what the market really wants to do versus the lower time frame candlesticks may not be as accurate, right? So now that we pretty much have our direction, from here we just break down targets, okay? So again, I'm only targeting the lows again. So what I'm about to do now is go down to the 4 hour and we're about to break down this range for potential targets. So now that we're on the 4 hour, right, we're looking for a couple of key support and resistance levels throughout this, pretty much this range here. So if I box this up, we're going to be looking for support and resistances throughout this area. We're going to drop some Fibo levels to see some nice confluencing throughout this level as far as to see any areas that are potentially more important than others, right? So that's going to be a resistance throughout this area. But as we come up, that's actually going to be our take profit one. Once we reverse out of this area, there's going to be a lot of pips as far as throughout this range. Okay. So that's about 75 pips for the TP1 that you guys can definitely grab, right? So that's going to be take profit one once we come back into this area. We can also see the 200 aligning with this range area that we have as far as, for the support now. So you see how we have our support at 106, let's say 700, 106, 700. We have our 200 EMA right here playing as support as well, right? So those are kind of that double confluence as well, to kind of help us see a important level. So if we just think of it about that way, we would consider it just an important level in the market. So I'm going to highlight the TPs in green. Me personally, I like to take 3-to-1 trades or better, right? So if you're taking a 3-to-1 ratio trade or better, usually you should always end out on top if you're a decent trader. Okay, so again, you have to get over your curve. You have to put in that time that it takes, the education, the studying, different things like that, until you get to that point in your trading career to where you're able to, win more than you lose, right? So for an example, if you're always taking a 3-to-1 ratio trade, guys, you can take 10 trades, you can lose 7 trades and win 3, and you'll still come out profitable. So a 3-to-1 ratio is definitely really key, as far as if you're trying to stay profitable. You don't want to take trades truly that are 2-to-1s. You want the ratio to be good, guys, because why? Sometimes it gets to the point where it's like you see people taking 1-to-1 trades, and it's like, why? It's not even worth it. The only way I would take a 1-to-1 trade is if I truly believe in the analysis and I know that it needs more wiggle room because I can't specifically see a perfect entry to where I can get in the market. So usually in those 1-to-1 ratios, for me personally, it's usually a situation to where I just enter the market with a very good low lot size, respecting my risk management, and just let the market do its thing. Okay, that's those kind of trades if I were to take a 1-to-1. Risk management is definitely very key, guys. If you're trading, you need to pretty much tackle risk management first before you actually try to tackle analyzing. Okay, and a lot of risk management comes from the inner self, so it's going to take a lot of self-development. If you're that type of person that's greedy, too antsy, too eager all the time, you're going to have to deal with those personal issues. Okay, start more meditation, start more personal development to start to get your mind in that state that you need to be in when you're entering the markets. Okay, you can't be greedy, you can't be antsy, guys. Patience is everything. Okay, you have to be able to wait on the market. A lot of people love to jump the gun. You have to wait on the market, guys. You have to wait. The market will tell you when it's ready to move. You just have to be able to identify what it's trying to tell you, but it will tell you when it's ready to move. Okay, so be patient. Don't be that person always jumping the gun. Okay, risk management is key. You have to master that before pretty much anything else, guys. And I tell you that from experience. It will hold you back. You'll keep losing trades, and you're like, why am I losing these trades? And honestly, not all the time it's going to be you. So most of the time, it's probably going to be your risk management. It's because your risk was too high, so you couldn't hold the trade, things like that. So you're like, oh man, my stop loss was placed at the wrong area. Well, the reason you put your stop loss there was because you were trying to run bigger lots and you wanted to kind of give a tighter stop loss, right? But you suffocated yourself. You have to make sure that you put an appropriate stop loss on these trades because the market needs room to move. If you're not putting the appropriate stop loss on trades and not giving the market the room that it needs to move, then you're potentially just hanging yourself every single time. So, don't beat yourself up if that is your problem. Recognize the problem, guys, and fix it. It's that simple. Recognize where your issue is and fix it. It's going to take some time to fix it. I'm not saying that you're going to be able to fix it the next trade, but you have to start the process of fixing it. If you don't, you'll just be in the same loophole the whole time, right? But risk management is going to be one of those #1 things that is probably going to hold you back as a trader. So if you can overcome that and build that discipline within yourself, then you're going to be a lot better off as far as in the long term, right? So looking at the targets back in this level. So one thing I love to do is Fibonacci. We can't necessarily put it there right now because we haven't seen the high be established. But what I would do is go ahead and put the Fibon from the low wherever the high establishes. So I'm going to just give you guys an example. If the market makes a high in a certain area, right? So let's say we came right here and we made our high. Okay, so this is where the Fibon would be placed, okay, at the high. So then this is now our Fibonacci as far as our levels on the downside. Each of these levels, the 38.2, the 50, and the 61.8, and the 71, are going to be key levels, okay? All of these are barriers, support and resistances. They're barriers, right? Areas where the market could potentially reverse. So if there are areas of where the market could reverse and you're selling it down, these are also areas to where you might want to look to take some profit off of the table, right? So if the reversal happens here, one thing that I also like to use is 38.2 usually is my take profit one if I'm not using price action itself, okay? The reason it's not take profit one in this example is because we're using price action itself as TP1, okay? So this could potentially be TP2. You could do the 50 as TP3 and the 61.8 as TP4. Usually I break mines down into 3, but it's completely up to you. So if you were to do it as 3, then you would, kind of do it something a little bit more so of like that, or at a more even level. So you can either kind of take the range of this, measure it out of TP1 and TP2 and put, TP1 and TP3 and put TP2 between the 50 and the 61.8. So you can do it that way, or you can look for more price action throughout this area. But again, it's a consolidated range, really choppy. So me personally, I'm actually going for Fibo targets. I do like this range of where our 61.8 is, seeing how it's aligning perfectly with this support region that we have throughout here. Again, guys, remember support is the floor. So we can see definitely a lot of rejection throughout here at this area. So I do like that the 61.8 is aligning there as well. So that would definitely be a secure target for me as far as headed back down. So eventually, as you get a better trader, you can extend those targets out as price action goes down. So another thing, how do you know if it's going to go further down as far as once you're getting to the 61.8? So how I was telling you guys, I usually just go for the retest. So the retest can either be considered here or it can be considered here, right? These are two very valid levels. So if it's going to keep going down, what I want to do is wait for price action to get down here. And then I'm going to relay back to that higher time frame vision, okay? And so I'm going to look to see what is the higher time frame telling me, okay? What is that candlestick telling me as we approach this 61.8? Are we strongly bearish? Or are we showing a little loss of momentum? If we're showing a loss of momentum, then yes, guys, I potentially want to go ahead and exit here and just leave it long. But if we're showing a lot of bears in that market as we approach this level and not a lot of exhaustion, then more than likely we will break this level to go ahead and achieve the next level that we were talking about, okay? So, and again, the same thing once it gets to this level. If we're seeing still that strong bearish price action, then that's what's going to help us identify potentially if we're going to be able to continue down with that momentum or if we're going to be looking to reverse, okay, and release some of that pressure that the market's been making, right? So that's pretty much what I'm looking for as I head down on UJ or just any analysis when it comes to taking profits, holding those trades for the next TP and things like that. So again, guys, this video today was a little bit kind of scrambled here, just different nuggets that you guys can take up on here and there. That's pretty much all I wanted to discuss today, is kind of give you guys a breakdown on the chart, a couple of insight on a couple of things that I use. I pretty much explained everything that I use kind of on my day in, day out. There are a couple of indicators that I actually have personally made that are based for momentum. So those are usually what I use, like the Doppler radar. I use that for momentum. I'm using the RSI as another confluence for momentum, but not as much as I use the Doppler radar. I use the RSI usually when I'm on the go, and the Doppler radar when I'm at home and have access to my MT4 platform. Okay, guys. So the Doppler radar is definitely one of those key things that I am looking at when I'm looking for exhaustion as well as price action. But guys, you don't need it. As you can see, we've just did this complete tutorial today without bringing up or mentioning any kind of indicators, okay? So again, those are only extra confluences that we can use to help us get a better insight on where the market is potentially heading, okay? I do hope all of you guys were able to learn something today and enjoy today's video, guys. Thank all of y'all for joining in and tuning in, guys. If you haven't already, don't forget to hit the like and subscribe button to stay tuned on any future as far as tutorials and market updates or setup or analysis that I do post out for the public community, guys. That's all I have for today, guys. Thank all of you and have a great upcoming trading week.